What's going on YouTube? It's Dave's Daily Trades back again with an update on AMC. So of course today, a bit ugly. We're down 15.31% in normal trading hours and slightly down in after hours right now, sitting at negative 1.25%. At the end of the day, guys, this is the composite man shaking out the paper hands and trying to accumulate as many shares as they possibly can before running this stock up. Now, if you guys are still with me, leave a comment, drive some motivation in the comments for some of those newer apes out there experiencing this. Just about 46% sell-off in the last couple of weeks. It's gnarly. Some people are just not mentally prepared for this. But you guys, I know you're strong because you know exactly what is going on. But in today's video, we're going to be breaking down exactly what the hell happened today. Even the entire market, we're talking crypto, we're talking major indices, we're all bleeding today. We're going to be going over and discussing the options flow. This actually looks pretty decent compared to the day we had today. We're also going to be giving you the latest updates with Evergrande, where I see that going, and when I potentially see this falling and crumbling down. And lastly, we're going to be also bringing BlackRock into the mix and talking about some of the dirty games that they have been playing. But without further ado, we're going to roll right into that intro and then hop into the technical analysis. And we're back. All right, guys, as I said, not a great day for AMC. But on the flip side, we like to think of AMC as a compressed spring. The more you drive down the price, the more you short this stock, the more compression that leads into the spring, which then creates a massive force to the upside. Now, of course, we hoped the spring was in, hitting that $25 mark just last week or a week and a half ago on 12/3. We came back up, tested the trading region that we have been discussing, but were rejected and came back down, and that's where we currently stand. Now, this area right here is absolutely going to be our spring phase. I'm not going to say the bottom is in because, in all honesty, we could absolutely come down and see the teens. We do have this gap fill I do want to kind of put some eyes on here, right around this area before we took off. This would be at the high of this candle, which is just about 1667. We could come down, and I would say that would absolutely be our lowest point that we would see for AMC in the near-term future. Do we hit it? Guys, we have to wait and find out. We have to break this down day by day. But the big things that I have been personally keeping an eye on is the volume. Over the past week and a half now, we have started to see volume trend in the right direction. As you can tell down here, we have been on very low volume, and over here, especially while we're at the lower region of our trading range here, we were hitting 25-30 million shares a day. Seeing it pick up today was decent. Of course, we would have liked to see a green candle instead of the red candle, but still 83 million shares. That means volatility is picking up. That means the volume is trending in the right direction, but of course, we want to see positive green candles from this. Now, that is why I do potentially see that low being somewhere in the teens, potentially somewhere around this 20 mark over here. 1985 would be a great low. But guys, let's take it day by day. Like I said in Sunday afternoon's video, it's going to get uglier before it gets pretty. And that is really where we're at right now. There's a lot of things going on in the overall market that is absolutely affecting the stock price right now. We have Evergrande's default. That is absolutely massive. Of course, the media really isn't talking about the potential kind of downfall that this is going to bring to the overall economy. We have inflation sitting at 6.8%, but if we use old metrics that they used back 20, 30 years ago, inflation's actually sitting right around 15%, which puts stress on the Federal Reserve to come out and start this tapering, to start the rate hikes, And now it really, I think they absolutely missed the ball on this. And now they have to be very reactive to this situation, which is not a great thing for the overall economy. And just taking a look right here, we'll take the SPY, for example. The SPY had a red day. I mean, we're getting rejected at the high at this point right here, right around that 40.70 level. We've been unable to break that range and successfully hold it since 11.4. And as you guys know, the S&P 500 in the overall markets has been on a tear. We have not really been shooken up at a certain level, and potentially I even see a head and shoulders playing out, especially today, on the S&P 500. So we could expect more downside because of these major indices. But like I said, guys, it all comes back to the spring. Even, we'll take a look at Ethereum real quick. Yeah, I do have a distribution schematic kind of playing out on this. But regardless, crypto's taking a hit rather. The major indices are taking a hit. Of course, all of the stocks are really trading down right now. So it's nothing to worry about, guys. In my opinion, sure, we may see a little bit more downside, but at the end of the day, does it really matter? No, absolutely not. My conviction stands. I know what got me into this play. I know why I didn't sell back in June at $72. I would have walked away with a lot of money, but I didn't. I'm still in this play, guys. I'm still in. I'm not leaving until we see that MOAS. And specifically, I'm not going anywhere until these shorts cover their positions. They're digging a deeper, larger grave day by day. And it comes to a point where they're at right now, they have to keep shorting this stock. They literally have no other choice but to drop this stock price down. We have some real big things that we're going to actually jump into right now. But first, let's absolutely start with the options flow. So for a 15% day, it looks like a lot of people were jumping in. So specifically, we do have a lot of activity around this 12/17 expiration, which of course is for this Friday. Open interest was relatively high, comparing it to previous expiration dates for last couple of weeks and even months. So that is definitely something interesting, possibly a sign for a reversal coming hopefully midday tomorrow. But of course, guys, this daily price action, it really does not matter. And also, the other thing, kind of moral of the story here, is selling puts. Of course, selling puts is very very bullish because they don't expect much more downside to the security. So you sell your put, you get out of that position because there's not much more money to be made. So that is really great to see. But breaking it down by the daily flow, the number of calls was 57% to the puts being 43%. So slightly on the bullish side, which is great, but I want to see this number get back up into that 60-70 percentile range. That is really great, and that's what we were seeing as of last week on that dip down to $25. So just about a week and a half, 2 weeks ago at this point. Looking at the expirations, this 128.21 expiration definitely has a lot of activity on it. That's some really good things to keep in mind. Not saying that on 128 we're going to moon, but that is where we do have some decent activity going on. I'll say that. Now, breaking it down by strike, you can see that the bears were full force today. Actually had a lot of interest of this $15 range, specifically the 23, which makes sense where we kind of dropped down and consolidated today. And the bears were really targeting 25, 23, and 15. But on to more of the juicy information. Of course, Sunday's video, we talked just about all about Evergrande. And I think this is absolutely huge and a very big catalyst that is going to help our cause and potentially cause the mother of all short squeezes. We've been talking about Dr. Marco Metzler for quite some time. If you guys don't know, and if you're new to the channel, first of all, welcome. But Dr. Marco, his firm, was actually directly invested in the Evergrande bonds. Now, of course, he was really the first to bring attention to this because his firm was not paid, and he's like, what is going on? So he moves over right to LinkedIn, right to Twitter, to really inform us right away from this, and since then has provided great updates just about every single day. So his latest update on LinkedIn says the following.
So the criminal probe against Citadel with second round of subpoenas on the AMC stock in progress and whistleblowers leaking information, ? Just this week, the DOJ, Department of Justice, announced that it will open a criminal investigation into hedge funds and research firms under the direction of the fraud section to determine how hedge funds use research to make their bets. And I know a lot of people were a little bit confused why the SEC really did nothing and why the DOJ is stepping in. And really the key thing is right here. We'll open a criminal investigation. The SEC, really the biggest thing that we see all the time is they're just going to find you. They're going to find you, let's say, $500,000, but on the flip side, for you doing that crime, you made out like a bandit. You made $10 billion. DOJ saying, no way. This shit is not going to fly too much longer. We're going and we're trying to bring some prison time to these nefarious players out there in the market, which is great, guys. We'd love to see that. Now, will anything come of this? Who knows? The DOJ does have a very high conviction rate, and they don't just step in to waste their time. They're very important. There's a lot of things going on in the entire world that they could be looking at, but they are on this issue right here, and that is what is important. So the DOJ has already issued a second round of subpoenas in the recent months regarding the AMC stock. According to the video by Practical Investing channel as of today, it's very likely that these investigations will hit Citadel, which I absolutely agree with this. Link the dots. This is where it gets kind of interesting. So, of course, we have discussed on the channel before that Citadel put a withdrawal fee on their investors' account. So, pretty much this was saying you can withdraw 6.5% a year, which is actually pretty crazy. Think about the amount of time it would take you to withdraw all your money from Citadel Securities. It's like going to a bank, throwing in $10,000 and them saying, thank you very much for your payments, but by the way, you can't withdraw any of this money, or you can withdraw 6.5% a year. That's absolutely insane. Why is this? Well, the answer is obvious, guys. It's because Citadel and other firms, they are strapped for capital right now. Their margin accounts are in absolute high stress right now, which is why I really believe they are going balls to the wall dropping this price. Because if they don't, these margin calls are literally going to hit them. They're not going to be able to make those payments, and liquidations will follow shortly after. So driving down the price to a level that we have not seen in quite some time, using all their ammunition kind of right here. A, yeah, they're going to try to shake out paper hands. Of course they are. But B, it's really showing how vulnerable they truly are in this scenario. They have to drive this price down. They have to. But as we know, per Fidelity, per all these other sources, the amount of buys coming in today was actually right around the 70% buys, even more. I think it was 75% buys and 25% selling. That is extremely high, especially on a day where the stock price drops over 15%. Anyways, as we know, what happened? Well, the Citadel Securities went and got a little nervous because they hired the Secret Service top agent for the personal CEO's safety. Now, why? You got to think about this. Think about Citadel's investors. Who are they dealing with? They're dealing with not the 1%. It says the 1% richest. No. They're dealing with the 0.01% richest people in the entire world. You tell the richest people in the world, hey, you can't take this money out? Huh. God bless. Those are some very large, influential people who do not mess around with money. When you tell them you can't take out money, or you only can take out a very small percentage of your money once a year, they're going to be pissed. Their clients are getting pissed. A lot of other people are getting pissed at them. And I think it's absolutely hilarious at this point. They think they're winning, but boy, do they not know who they're messing with. So that's some interesting things. But let's talk about BlackRock. And this is actually a little small for even my eyes right here. Come on, zoom in. There we go. Hopefully that's not too blurry. Anyways, Evergrande has been on the talk of the macroeconomic world, as we know. The inevitable default is just as inevitable as the MOS is. Once that domino falls, everything will fall into place, and here is exactly why. This breakdown is literally spot on, and I've been trying to put this kind of in context for everyone, and this post just did that. So anyways, BlackRock holds $9.2 billion in Evergrande and $9.5 billion in Country Garden, as well as $500 million in K-Asia bonds. BlackRock owns a ton of terrible Chinese assets. As we know, all of these real estate and development companies out there in China, some are already on the bankrupt side of things, and some are following suit. Absolutely. And their accounts are going to be in trouble. Of course they are. You can see them here. You can click on the link, yada, yada, yada. I'll link this in the description so you guys can do just that. AMC is also in their portfolio. It is 0.6% of the Russell 2000 ETF, which is most of any asset in it. Since they are loaning about 40 million shares out, they may have to recall those shorted shares. But why? For that to happen, those shorts will have to close their positions. What happens when that happens? Well, we see massive price action, massive volume come, and massive boom, boom freaking candles, guys. We saw what happened in January when over 70 million shares were bought by institutions, and keep in mind that they had to turn the buy button off because of the volatility of this. 40 million having to be bought up all at once will likely cause the other 70 million out of the 103 million currently being shorted to also have to cover. The situation is really bad for BlackRock. If they can't avoid losing billions of dollars in junk China real estate, ETFs, and bonds, they may get margin called, but here's the kicker, and that's where it all wraps together. Since BlackRock loans out most of their AMC shares, when those are recalled, the stock would squeeze and their books would be in the green because AMC will be worth a lot more than just $30. AMC squeezing is a hedge for BlackRock. And sorry, it took me a minute to get out of my Zoom there. That caused some headaches for me. But think about it, guys. BlackRock right now is hedging against all of this stuff. The issues in China, the potential, the scares of inflation, tapering around the corner, a potential debt limit ceiling that is not going to be raised. That is down the road. But still, there's lots of micro and macro economic issues out there in the world. BlackRock, what they're doing right now, yeah, they are loaning these shares to create this infinite loop of short positions. We know this. But on the flip side, BlackRock needs to make money because they are the world's largest investment bank institution out there as we speak right now. They can't go under. So what are they doing? They know exactly all the shit that goes on in the financial worlds, specifically what's going on with AMC and GameStop. When this all goes down, because I absolutely believe that there's always two sides of the trade. On one side, it's going to be bloody, and on the other side, it's going to be absolutely wonderful. Well, we're on that absolutely wonderful side, and BlackRock knows the terrible things that are going to happen to the overall economy and stock market, so they hedge. They hedge their position, and that's what they've been doing for the past 11 months. They're hedging against the potential downfall. Once this starts going, BlackRock is going to kick in. They're not our friend, by the way. They're not our friend. They're just in this to make money and hedge against the potential downfall of all of this. But once this all kind of goes to shit, that's, in my opinion, when those margin calls come, starts with those smaller firms, moves up to the medium-sized funds, and then to the big final bosses such as Citadel. And that's what I call endgame, guys. Like I said, we'll even bring it back to the chart and just finish on this. We can see some more downside. And to be 100% honest, they can drop this thing all the way down back to $8, back to $5, back to the low. Does it matter? No. I know how this is going to play out. I know how this is going to look. It's a matter of time. That's all it really comes down to. So guys, be strong. Be greedy when others are fearful. Sit back. Watch the show. All right, everyone. Peace out. Tune in for the next one.